Welcome to today's market report.
The Stoxx 600 gained 0.87%, ending near an all-time high set earlier this month after news that German business morale hit its highest in 2.5 years. Britain's FTSE 100 share index rose 0.51% after the Bank of England kept the size of its stimulus program unchanged and left its benchmark interest rate at an all-time low of 0.1% as expected. The DAX rose 0.86% after the close on Thursday, as gains in the retail, transportation and logistics and technology sectors led shares higher. CAC 40 gained 1.22%, while the SBF 120 index climbed 0.17%. The stock was higher as gains in the foods and drugs, gas and water and general financial sectors led shares higher. US stock indexes set fresh records on Thursday, fueled by supportive US jobless claims data and an apparent breakthrough in infrastructure spending talks in Washington. President Joe Biden on Thursday embraced a bipartisan Senate deal to spend hundreds of billions of dollars on infrastructure projects, building roads, bridges and highways in an expanded effort to stimulate the economy. The S&P 500 and Nasdaq opened at record highs and extended gains, boosted by shares of Tesla and other top-shelf technology firms and jobless claims data that boosted investors' hopes of a steady labor market recovery. The Dow Jones rose 1.04%, S&P gained 0.67%, Nasdaq added 0.74%. Jobless claims numbers came in a little high, but looking week to week, they are still moving in the right direction, according to E-Trade Financial. The data is another proof point that the economy is coming back to life, albeit maybe in a slightly bumpier fashion than some anticipated at this stage. Oil prices were up, hovering near the previous session's 3-year highs, set amid drawdowns in US inventories and accelerating German economic activity. US crude recently rose 0.18% to $73.21 per barrel. Brent was at $75.41 per barrel, up 0.29% on the day. Spot gold dropped 0.1% to $1,776.97 per ounce. On the FX front, the GBP/USD is trading slightly above 139 under pressure amid a rally of the US dollar and following a sharp slide of the pound on the back of the Bank of England meeting. The pound tumbled after the BOE released its statement from the latest Monetary Policy Committee. The central bank kept policy unchanged as expected, but it was seen as a dovish meeting, triggering the slide of the pound. Cable bottomed at 138.88 and then bounced to the upside, finding resistance at 139.30. This clearly wasn't the hawkish tilt on which some market participants had placed their bets on. The tension will quickly shift to the August meeting when the MPC has a full set of fresh staff forecasts at its disposal and will have to make a new decision on the pace of gold purchases. The US dollar gained momentum during the American session. Economic data from the US was mostly ignored by market participants, and the currency trimmed losses across the board during the last hours, probably amid some optimism about a bipartisan deal, the US Congress for Biden's infrastructure program. The 140 zone capped the recovery of the GBP/USD after falling sharply last week. The pound failed to regain that area and started to pull back. On Thursday, the pair appears to be resuming the downside. The next strong support is seen at 138.50. A break lower would add more pressure. On the upside, a recovery above 140 would elevate the negative bias and should favour an extension to 140.65, the 20-day moving average. The weekly upside in Eurodollar ran out of steam in the 119.70 area on Wednesday. If the recovery gathers extra steam, then there is room for spot to challenge the 200-day SMA on Thursday at 119.93, ahead of the psychological 120 hurdle. The dollar index was little changed on the day against a basket of currencies at 91.79, holding below a 2-month high of 92.48 reached on Friday after the Fed meeting.
This is today's market news. Thanks for listening. We'll see you next time.